All right, traders, I want to talk about consistency today, not what it means in theories, what it actually looks like in practice, and specifically what changed for me when I stopped being inconsistent. Because I've made a lot of videos this month about rules, about trade plans, about reviewing your data, and I've gotten a lot of questions that all come back to the same thing. I know what I should be doing. Why can't I just do it consistently? Today, I'm answering that. This is a strategy, the full picture, how it all connects, that actually moved the needle for me. Let's get into it. Now, quick ask before we dive in. Hit the like button if you're here. It takes a couple of seconds on your part and it genuinely helps this reach more traders. And make sure you're subscribed. I drop new content every week, and tomorrow I'm going live in collaboration with Simpler Trading during market hours. So set a reminder. That link is in the description. First, let me reframe what consistency actually is, because most traders think consistency means winning most of your trades. It doesn't. Consistency means your results are predictable based on your process. A consistent trader knows roughly what their win rate is. They know their average winner and average loser. They know that over a series of trades, the edge plays out. They're not surprised by a losing week because a losing week was always part of the distribution. An inconsistent trader can't tell you any of those numbers because their process changes based on how they feel. Good week, they get aggressive. Bad week, they get gun shy or they start revenge trading. The process bends to the emotion, and a bent process doesn't have a measurable edge. That was me for longer than I'd like to admit. I had a strategy that worked and inconsistent results because my execution of it was different every single week. That's not a strategy problem, that's a consistency problem. The strategy that changed things for me is built on supply and demand. And I want to be clear about what that means because it gets misunderstood. Supply and demand trading is not about drawing boxes on a chart and waiting for price to touch them. It's a framework for understanding why price moves and using that to find levels where the probability is genuinely in your favor. Here's the core idea. When price moves sharply away from a level, up or down, it leaves behind what is called an imbalance. Institutional buyers or sellers moved through that zone fast, and there were unfilled orders sitting there. When price comes back to that level, those orders are still there. That's why price reacts at supply and demand zones, not because of a line on a chart but because of actual order flow. When I started trading from this framework, really understanding the why behind the levels, two things changed. First, I had far fewer setups. The levels I was willing to trade shrank dramatically because most of the chart became noise I didn't need to react to. Second, the setups I did take had a logic I could articulate. I wasn't trading a pattern, I was trading an imbalance with a defined entry, stop, and target. That clarity is what started to produce consistent results, not because the win rate was suddenly 100%, because I knew why I was in every trade and I knew exactly what would tell me I was right. Here's what most traders don't realize about supply and demand. The setup filters itself. Either there's a clean imbalance at a clear level or there isn't. You don't have to debate it. That binary quality is what makes it tradable consistently. All right, quick pause. Everything I'm walking you through today, the supply and demand framework, the trade plan built around it, the rules that keep the execution clean, this is a complete system. And the full trade plan template, the pre entry checklist, and the process I use every Saturday to build the week's watch list, all of that is inside the Price Plan Profit membership. More than the resources, though, there's a community of traders inside who are building this same system alongside each other. They're bringing their plans every week, reviewing their trades, and doing the actual work of building consistency, not just watching content, executing it, and getting accountable feedback. If you've been watching for the last few weeks of content thinking, I need to actually do this, not just understand it, that's exactly what the membership is for. The link is in the description. Come check it out. Now, how the plan locks the strategy in. The supply and demand framework gives me the where. The written trade plan gives me the when and how. Here's what I mean. I can identify a beautiful demand zone, clean and balanced, sharp move away, clear level. But without a written plan, I'm still making emotional decisions at entry. What's the trigger? What exactly is the stop? How many contracts am I going to buy? What's the target? What has to be true for this trade to work? These questions have to be answered before the market opens because once price is moving and I'm watching a setup unfold in real time, I'm not in the best headspace to answer them clearly. The plan answers them when I'm calm. The execution just follows the plan. That is what made this strategy consistent for me, not the supply and demand framework alone, and not the trade plan alone, the two together. The framework tells me which levels matter. The plan tells me exactly how I'm going to trade them. And when I have both, the decision in the moment is already made. What I'm big on is removing as many real time decisions as possible. Every decision I make while the market is open and price is moving is a decision that's being made under pressure. The goal is to make almost all the important decisions before that pressure exists. The third piece, and the one that most traders skip, is the rules process. The supply and demand framework gives me the levels. The trade plan locks in the execution. But there are still moments, and I've talked about this a lot this month, where emotion wins, where I enter a trade before the trigger fires, where I move a stop I said I wouldn't move, where I skip the written plan because the setup feels obvious. The rules exist specifically for those moments. They're not general guidelines, they're specific constraints built around the exact pattern where I've historically stepped outside my process. Rule number one, I do not enter a trade before my trigger is triggered. And if I'm waiting for confirmation, I don't enter the trade until the trade is confirmed. Number two, my stop is written before the entry and it doesn't move just because my position is going against me. And rule number three, I have a full written plan before I click. All five fields, no exceptions. Those three rules close the gap between having a strategy and executing it consistently. Because I can have the best supply and demand framework in the world and a perfectly written trade plan. But if I'm entering early, moving stop, skipping the plan when price is moving fast, none of it produces consistent results. The rules are what makes a strategy repeatable under pressure. That's the last piece. So here's the full picture. Supply and demand gives me a framework for identifying which levels are actually worth trading and why. The trade plan translates that framework into a specific written decision for every setup before the market is open. The rules protect the execution when emotion tries to override the plan. The framework, the plan, the rules, that's the strategy. And here's what consistency looks like when this system is working. I have fewer trades. I have less urgency during market hours. I'm almost never surprised by a result because the decision was already made before price moved. When a trade hits my stop, it closes at that written level. When a trade hits my target, it closes at that written level. The outcomes vary, the process doesn't. That's consistency, not winning every trade, executing the same process on every trade. The part that took me the longest to learn, you have to build the system when you're not in a trade. Because when you're in a trade or when you're watching a setup develop in real time, you will find reasons to bend the rules. The system has to be so clearly defined that bending it feels like a violation, not a judgment call. All right, traders, that's the full strategy. Supply and demand for the levels, written trade plan for the execution, and rules to protect the process when the pressure shows up. Three things that work independently and work together as one system that produces consistent results. Here's my honest take: the knowledge isn't the hard part. You just watch me explain the whole thing. The hard part is doing it every week, consistently, when the market is moving and emotions are real. That's where accountability changes everything. Inside the membership, the template, the checklist, and the community of traders doing this exact work alongside each other every week, not passively, actively, bringing our plans, reviewing our trades, building the habit with real accountability behind it. If you've been watching this month's content and thinking this is a system I need, you're right. You can join the membership for a small monthly fee and get exclusive video contents and exclusive live sessions. Check out the link in the description below to see if it is something that you would benefit from. Or join me in one of Simpler Trading's live trading rooms, either the Trendy Trading Room or the SPX room, where you can trade live with me and my trading partner, Trendy John, every single day. We have the best community of traders out there. Otherwise, subscribe and find me tomorrow when I go live during market hours. We'll be looking together at what helps me be a more consistent trader. Set a reminder, you don't want to miss it. All right, y'all. Have an awesome rest of your week and take care. I will see you in the next video.